Well, good weekend all. Ira Epstein, and here we are with your metal market wrap-up, your weekend edition. And this is where we look at weekly charts. And this is for Saturday, the 5th of April, 2025. What a week. Profit taking finally did hit in the gold. Many of you that come in and get my newsletter and so on saw an interview I did on Wednesday where I came out on Aussie TV, Australian TV, and I said on an interview there is the market, and the interview was about 5:40 p.m. Central Time. And I said, this is where I'd take some money off the table. I think the pros are going to do that. Well, that was around 31.90. You're down 160. Again, even broken clocks get something right every now and then. But it appeared to me that the gold had discounted the worst of worst conditions, and it was ripe for a correction. No more than that. I didn't say it's bearish. I thought that there was going to be profit taking. I certainly didn't expect Friday's $86 breakout of left field, but that's what happened. But I did think the 3,200 level was enough for the moment. Silver down another $2.70 an ounce. Copper down another 42. Do you remember all week long and the week before I said you don't want to be exposed in American copper? And I didn't say world, American copper, the futures contracts we trade, because the differential between London and where we're at was so big it made no sense if you're in the trade business not to load up every single ship you can get and get copper into the United States and make before your cost 17%, maybe a little more, by hedging futures contracts and delivering on them. That's not a game for the two of us, but it was certainly the game that was going to bring copper in. Number two, the Trump administration did not tariff copper yet. So you have more copper because of that. The price didn't go up. The shiploads of copper are coming in, they deliver on it, and they get copper down. In 4 or 5 days, it's down $1 a pound. That's a huge move, 20% move already. Platinum down. So the run-up ran its course. The event took place. Today, we have 10% more tariffs on everything from every country doing business with the United States, all right? I don't know of who's exempt from it, but I'm sure there must be somebody, because I saw 65 countries. The world's got a lot more than that. What else do we think? Well, now the question is, as we walk into the markets on Monday morning, or actually Sunday night is where it's all going to begin, what's going to happen with margins? What's going to happen with world news? As of Saturday, right now, which is just after 3:30, there's nothing going on. I have not seen anything out of the White House. The president was at Mar-a-Lago. He was at the Doral Country Club. He's doing whatever he does. And I'm sure the bells and the phones are ringing and people are negotiating away. But I think he wants that second level of tariffs, not just the 10%, the reciprocal, their definition. That's the White House definition of reciprocal. Forget the math of actually trying to figure out why go through it. Most key economists will tell you, from a purely academic point of view, it doesn't make sense. It doesn't have to. He put it out there to get numbers out there, conglomeration, and that's the number he came up with. You want to lower it? Talk to me. That's the important thing. You want to lower it? Talk to me. Let's see what you can do. Offer me something, quote unquote, that he said on Thursday as he was flying to Florida. Offer me something phenomenal, and we will listen to it, all right? At the same time, as other people are saying, we're not going to listen to anything. That is nonsense. They will listen to all deals to try to pick the good deals and get this thing rolling back where he wants. He wants fair trade. End of discussion. You broke the heck out of the energies. They came apart because OPEC's going to produce more. They've threatened to put 430,000 barrels a day more on the market starting in May. Combine that with the 34% tariff that China's now putting on the U.S. and the world's trade war that's taking place, everything gets hit. The stock market gets hit. That. Why the dollar rallied, I can only attribute it to short covering, not really much more than that, because it got hit so much. But when you and I look at the gold market, for the month, we're only 3 days of business days in the month, you're down for the month 3.55%. Okay. For the week, the market was down 2.41. It did not go into what we call a key reversal. You made the highest high and you closed lower. You didn't take out the prior week's low. The support in the market, I've been telling you on different charts, is probably going to be the 18-week average of closes. That does not mean I am saying you have to go there. This market is moving to the tune. That's 28.23. The week before was 28.03. The week before was 27.83 roughly. So it's moving about $20. So maybe you'll get up to the 28.40, 50 area. That'll be where it's at. That should tie in with the last break low if it wants to go there. Momentum-wise, you kept the bullish embedded reading. GLD did not. Interesting how they broke apart. So if this closes under 79 at the end of the week, this is only going into Monday. This is a weekly chart, not daily. If it were to close under 79, then I can see price in the 18-week setting up to maybe make a run at each other. Doesn't have to happen. You could drop towards that 80 level and find some support there. So gold, in my opinion, has not entered the bear category. A lot's going to depend if it does that. In terms of the slow stochastics, you see that. In terms of the gold-silver ratio, we're up to 103. The last peak we made was 120. So can you go back there? Of course you can go there. Do you have to? No. But this market has stayed from back here, October of last year. It got over the 18-week average and on a weekly basis, never got under it, which meant gold was staying stronger than silver. The daily gold-silver ratio was flipping back and forth. The weekly never did. When you come to silver on its own, you peaked out against the upper band. You took out everything. You fell apart. So now this is your big support area. Could it happen? Sure. A lot of people are going to come in on margin calls. $3 breaks in silver on a full-size contract is almost $15,000. So these are not pennies you're dealing with. This is a lot of money that you're dealing with. So it depends how the pressure comes in, what traders do. But that would be the area that I would go like this. I think it's going to find a home in that area. That's what I believe. In the copper, you're already in the home area. Does not mean you can't drop further. I'm not foolish enough to say that. I see the bigger support at the combination of the 200-week and the 100-week averages, 411.45, 411.35 roughly. They're together. That is the area that whether it slips down further under $4 towards 380 or not, that'll be the zone where I think short covering will hit with a bigger way. I do think some hit on Friday. When we look at the platinum, down, and I would have looked now for this number to be your support. Now, Friday offered no support of moving averages. None. If you take a look, it paid no attention. We should come back a week here to see what I'm saying. Here's the 200-week in light gray, the red, the 100. It went there the week before. That was the support level. This week, you started off higher, and when you went back through, it didn't matter. Why? Can't answer it, but it already fought this how many times? It fought it for a month. There's a point at which support, it's like thread on a jacket. You keep hitting that area, you're going to wear through it. Just like that. That's what happened. You're now entering oversold territory. And last, as we get to it, the dollar. Well, yeah, right here. So this light gray area, you see, that's the 200-week average. First time you hit it. I teach that when you hit a 200-week average, logically, it's going to be either if it's on the upside, resistance, if you're going to it, or on the downside, support. Folks, it's a 5-year moving average almost. That's a big amount of time. So when it goes there, moving average people typically respect it. The market fought its battle for a month at the 100 and the Bollinger Band. It just didn't hit it and run or break. It stuck there, and then it finally gave ground. So pay attention to the Bollinger Bands, especially when they're with moving averages. They're crucial in charts. I think they're major league. So with that said, if you want to find out more and learn what I'm doing, and I teach it in my course, it's inexpensive. You get the charting software you see me doing. You get my morning subscriber videos and my written update for a couple of weeks while you take the course. Pretty good deal. And it's all about your education. So go to iraepstein.com education, sign up. I hope you do so, and I'll be talking to you. I'm Ira. You have yourself a great trading day. Sunday night's going to be a bit wild. Take care.